I wanted to go over this question on this particular trade setup. Um, he was asking about overall the weakness in this market, and there was weakness when he initiated this trade. However, I want to take a closer look at this daily chart and kind of show you what I'm seeing, where this spring would have been a good reason to exit this position. Um, Looking at the daily chart, one thing I notice here is this bar stands out. It's the largest up bar that I can see on this chart going back all the way to January 23rd. That is literally the largest up bar. There's lots of down bars that have a decent amount of range, but it's even bigger than most of the down bars. I believe it's bigger than this bar. So these generally are areas where you're going to find support. This is a concept that David talked a lot about. In fact, he has an indicator on here. I don't have it plotted, but it tells you, it just tells you the range of the bar and if it's an up or down bar. And it's so significant that this is something worth watching. Now, obviously, there's some weakness here. We have some supply that came in, and we have a little bit of no demand on this pullback. And really, if this was weakness, we should have stayed below this low here on the daily, significant. And we probably should have been piercing the low of this high range up bar. Generally, that's an area of absolute, it's a line in the sand. And once you get below that, it's telling you this demand is no longer good. But in this case, we actually have a spring that is within the range of this bar. Draw a box. I used to do this quite a bit. Now, this box is representing this range of this bar. Any kind of spring or bullish signal that happens within this, I would consider a valid spring or up thrust. It's the same kind of situation where we have here. Now, this wasn't one bar, but on a weekly chart, this would be definitely one large range up bar. In fact, let's take a look at the weekly on that. Yeah, you see here, we have a large range, the largest up range bar we've had. This might have been larger, but for quite a while, a very significant bar. And we had a spring on this daily, oh man, I lost it briefly. We had a spring here within this range. It's a valid spring to take. Obviously, this one didn't yield much. In fact, you probably would have broken even, best case scenario on that particular one. But that's something you look for. So looking at gold now, we have this ease of upward movement in the background. We get a spring within the range of that ease of upward movement. That's telling me a little bit more on the bullish side. So on my short-term trade, like the one you took on GLD, I think you just looked at day session. Well, actually, I'm looking at the future. You're looking at GLD in particular. Another point, I tend to like to plot. I consider gold a 24-hour market, so I like to plot. Generally, most of the time, I'll plot the future, and then I'll use the GLD for trading it. But the technical signals in GLD wouldn't be as strong as something in the futures market. But that would give you cause to exit your credit spread. I can't remember where you entered it. I think it was somewhere in here. So you probably would have made a little bit of profit on that trade. Granted, in hindsight, we can see that the market did move quite a bit higher after that spring. But that would be my view on the market. And, looking at, here's a 24-minute chart or 240-minute chart. Demand's very strong coming in, ease of upward movement, and we're getting clustering of closes on this pullback. So if we can take out the high of this bar, it would be a very bullish sign for gold to move higher, especially given the spring that we have in the background. So I'm actually even considering buying some calls in gold. I kind of feel bullish on it based on the daily chart, and if I can get good confirmation on the 240-minute chart. I do look at tick charts as well. I think the 24,000 tick chart's a decent one as well. Look at all this effort with no result to the downside. That's also a big red flag. Generally, when you're in something and you have a line, and like for instance, here, I want to see us break above it and hold above resistance. I don't like to see it, go dip below it and then pop right back up. If this was going to be a good trade, we should have dipped below it, came out and tested it and look for prices to go lower. That's generally what happens. I mean, it can peak a little bit above it, but I mean, here, this bar here is very bullish. It closed on the high of the range. So I wouldn't even consider holding on to it. I might have held through this bar, but once we started moving higher, I would have cut that one loose. And that's how I would have managed it. You got to, it's basically you're reading the tape. You want to see, you're expecting certain things to happen if it's a good trade. For instance, here, this looked like it was going well. Came down and tested it. Came down, tested it again when it broke above this high. Once you started breaking down below here, you probably looked to get out of it. You could have used a parabolic SAR in this case, would have got you out of gold right around here. But that's generally how I try to read the tape on these things. So that I guess is kind of a long-winded answer to your question on that one, but I think you weren't being overly cautious by considering exiting that trade. So yeah, I think that would be a good line of action, especially seeing that we got a spring down here. This was good action all the way until here, and at that point you got to change your mind and not stick too closely to what your original analysis was. You got to be able to kind of go with the flow of the market and recognize that the market just didn't have enough supply to push price lower. Anyways, hopefully that answers your question.